July new home sales posting their biggest monthly gain in 2 years today. And with Fed Chair Jerome Powell signaling rate cuts are coming, are tailwinds building for the housing and home builder stocks? Let's ask Tyler Batory, who covers this space at Oppenheimer. Tyler, good to see you today. Okay, so you got home sales coming in much higher than expected. What does that mean for home builders?
Yeah, well, to be honest, the July numbers we got this morning almost seem too good to be true. Our perspective on this, we think sales rates are not going to get better in August or September. I think it's certainly contrary to the view that's in the market right now. The rates are going to tick down. That's going to reinvigorate even more housing demand. What we're seeing from our channel checks, buyers are actually pausing their purchasing decisions right now. I think there's some seasonality at play, some uncertainty around the election, but there are a lot of consumers that expect mortgage rates to move even lower from here in the next couple of months. That's resulting in a lot of buyers hesitant to transact. And ultimately, I think should mean sales rates flatline, maybe decline. It's probably going to mean more incentives coming in from the home builder. So at the end of the day, if you're a consumer in the market looking for a new home, this is a good dynamic. If you're a home builder selling homes, we actually don't think this is a great dynamic over the next couple of months, given potential incentive activity.
I guess the conventional wisdom or the common sense thinking about it would be like, one, with mortgage rates sitting so high, so many people have been putting off either the refi or jumping into a new home. Two, because of this whole availability issue in housing, people have been putting it off. That once rates start to come down and mortgage, wouldn't that be the catalyst to jump it? I mean, it just seems so contrary to what you might jump to the assumption there, Tyler.
Yeah, I mean, there are a couple points I'll make. On the new home side of things, again, I think there's just this short-term blip, this short-term dynamic where, yes, rates were so high, they've come down. There's just this expectation out there that we're going to see 6 or 5.5. So why would we buy now if rates are going to go even lower? On the existing side of things, this whole golden handcuff dynamic, there's lots of people that have a low mortgage rate. Why would you trade that low rate for a higher rate? Whether mortgage rates are 7, 6, 5%, that financial disincentive to sell your home is still very much alive and well. I think the bigger problem on the existing inventory side of things, a lot of the inventory isn't really that nice. I mean, the average age of homes in this country is over 30 years. If you look at a lot of millennial buyers, they're coming from an apartment, maybe it was built more recently, has lots of light and open floor plan. I think there's a lot of instances where that customer, they don't really want to buy a home that was built 30 years ago that still has popcorn ceilings or rugs in it or something like that. I think they're much more interested in what the new homes offer, what home builders offer in terms of their modern, contemporary designs and the ability to buy that mortgage rate. So that is still a tailwind for home builders. I think right now, just on the new side of things, just a little bit of a digestion period. I think a little bit of a soft spot. And then I do think demand is going to reaccelerate later this year and into next year too, given the dynamic of mortgage rates going lower.
Especially when you're talking about an aging housing stock, what we heard from Lowe's and Home Depot is that homeowners are also just waiting and putting off their big renovation projects because of rate fears, maybe recession worries, what's coming down the pike. What do you think turns that? What's the spark that's going to take to turn the psychology?
That's a good question. I mean, our perspective on this, you look at whole repair, remodel demand, home improvement demand. At the end of the day, there was just so much pull forward given the COVID dynamic. Everyone was locked at home. Everyone wanted to do projects at home. And there was probably at least 7 or 8 years of spend that was condensed into a 3-year time period. So there was a pull forward back then. Now there's a little bit of a pause given some of the uncertainty that's out there. I mean, look, if rates tick down and they stay down, that is really what I think is the catalyst. In addition, just time, right? If you're not satisfied with your home, you may feel uncomfortable renovating it today, given some of the dynamics. Yeah. But as months go on, as time goes on, your perspective starts to change. That alone could motivate you to make some changes.
I'm looking at your coverage group here, and I'm curious why Toll Brothers is your pick out of the bunch.
Yeah, so Toll Brothers has been our top pick for a long time now, and I think they're playing a different game than a lot of other home builders out there in terms of selling to an affluent customer. So their average sale price right now, right around $1 million, almost 30% of their buyers are actually paying all cash. So it's a much different targeted consumer than a lot of the other home builders. You throw in a management team that I think has done an excellent job focusing on returns, buying back stock, adjusting how they underwrite land, contributing to higher gross margin. A lot of factors here that are good, and a lot of tailwinds that I think can continue to drive this stock higher in the future.
But, you've got D.R. Horton up 62%, Toll Brothers up 87%, Lennar up 57% over the past year. How much more room do the stocks themselves have to run?
Yeah, so Toll Brothers, we think there's upside here. In the short term, I will say we're a little bit concerned. I do think the stocks have moved a little bit in front of fundamentals. Again, we talked about this potential soft patch in terms of demand. I don't think that's really priced in. So maybe you get a little bit of a short-term blip here. But when we look a little bit longer term at this entire sector overall, if you're an investor that's fortunate enough to have a 1 year, 2 year time horizon, I think there's lots of good tailwinds here. Demographics favor single family ownership. There's still not a whole lot of supply out there. I think these companies, the home builder sector collectively has done a really excellent job in terms of adjusting how they manage the business, lowering risk as well. So while there might be some short-term concerns right here, long-term, we're still very bullish on the sector.